Welcome to Power Charting. I'm your host, Bruce Frazier. Wyckoff Speaks. We are going to embark on a discussion over the next number of weeks about the language of the markets, how the markets communicate to us their intentions, what they are setting themselves up to do, and how they go about the process of going from point A to point B. There were no better teachers of the language of the markets than Richard D. Wyckoff and Dr. Henry O. Pruden. In my early days, I really struggled because I would show up and I'd say, Mr. Market, this is what I need. I need for this to happen, for that to happen. I would make trades. I would try to dictate terms. And I struggled with that. And then it occurred to me that my responsibility, my role in this relationship is to be a good listener, to pay attention, to understand the language of the market, how it intends to go about communicating where it's going, what it's doing. And if we allow the market to communicate with us and we intimately learn that language, we are going to have the ability and the experience of being able to ride along, to participate in the market's unfolding. And the market is very, very good at communicating where it intends to go, what it intends to do. It doesn't hide anything from us. It just demonstrates its intentions over and over again in many different ways. We're going to start that journey here by talking this week primarily about the current market and where the market appears to be headed. So please join us on October 11th for the Wyckoff Market Discussions. Roman Bogomazov and I will meet at 3 p.m. Pacific time for an hour-and-a-half long market discussion. It's a lot of fun. You are invited to attend this open session. Simply go to Wyckoff Analytics and register for this free event. It's there's no obligations. Just join us, be part of our wonderful group, and we have a terrific time. Now, let's begin by looking at the S&P 500. You've seen this chart over and over again. I'm going to focus mostly on just updating the current conditions of the market, what it's moving towards, and we will look at the concept of the language of the market and listen to the market as we go into future sessions. A little bit on that today. There's three things that we see in a price chart. We see form, momentum, and extent. So form would be the structure, say accumulation or distribution. Both of those structures are present in this chart. Momentum is the rate at which a market goes up or goes down. The momentum changes, it exhausts itself, and so on. And then we have the extent of move. And we will talk about all three of these in the weeks ahead. But for now, let's just focus on some very interesting events that have happened recently. And if we look at the stride of the market, we see here at this low and this low, we can draw a demand trend line. And this demand trend line gives us the stride of the market going up. Well, look how well this worked. We drew an overarching supply line on that high point that intervenes these two lows and had a touch of this position here in late July. So this is an overbought condition. Now, this overbought condition often gets a reaction. You can see that there's a climactic surge that then slows down as it finally reaches this overbought and stops here. Well, we can look at the internals of the market and see on the stocks above their 50-day moving average that in fact, this is on the New York Stock Exchange now, and this is the S&P 500, that stocks above their 50 days stopped moving up, got into an overbought position above 80%, very broad, strong move with many stocks in an uptrend above the 50-day average. This blue line is the 50-day right here. You can see that for the S&P. And then it formed divergent behavior, higher high prices in the S&P and lower high or flat range in the oscillator, showing that the momentum of the market was slowing internally prior to the index itself. And then it turned down off of this level. Now this is through September 12th. I'm going to update that chart here in a minute. So, and this is the distribution area that was in 2021. And I know you've seen this chart many times before. All of these different notations are ways that we literally keep a record of our thinking about what the market was doing going through time. You'll note that these green shoots show up at the lows also: oversold, divergent conditions, and then an upward stride. Well, here we have an overbought, divergent conditions, and a downward stride. When we get a downward stride in the stocks above the 50-day moving average, this is something to heed the warning of, because the market is now showing signs that the majority of stocks want to go into downtrends. And this is an environment, it's a headwind. It becomes very difficult to make returns when you have a downward stride in the market, and therefore you want to tighten stops, reduce exposure, sell off your swing trading positions, and so on. Okay, well, let's move on and update this chart. And here we see this is through today, September 21st. Interestingly, there's a gap in the S&P 500 in the downtrend that occurred today, and it gapped down towards this area of support. Now, we'll keep an eye on this to see whether it can hold this. If it continues to be weak through the support area, that can really be a sign that this market is for sale. The upward stride here is shown by this green line. This is the demand line. This is the place where demand would tend to show up, and you can see that the 50-day moving average is, this is the 200-day. We only have the 200 on here. The 200 also is around the level of the demand line. So this is a classic place for a reaction to go to that we would have to call a normal reaction in an ongoing uptrend. I want to point out that we have this time element. And the time element that I think is so important, I talk about it over and over again, is end of quarters, end of years. And so you can see here that we are coming into the end of September, end of the third quarter. We often have important highs and lows that clock in at these quarter end periods. So we had note that we had a high point here at the end of July. It was slightly taken out in the weeks following the new quarter starting. And I like to say that the high can often be plus or minus 2 to 3 weeks of the end of a quarter. This high came a little over 3 weeks past the end of the second quarter. And here we can see weakness coming in. This could be a magnet for the end of the quarter period here in October. And we also know that the September-October timeframe is among the most weakest of the year. We have seen seasonality charts in prior episodes that show that September is often the weakest month of the year. And so we will pay very close attention to that. Let's turn our attention to point and figure. Now, this is a very old point and figure chart. This is October of 22, and we have a an accumulation structure. This was a period where we had positive green shoots in the breadth indicators around these lows. We took a count that went up to the resistance area right here, and the counted 40, 25, 41, 75. And we said if it got to this level that we expected it to build a larger count, and this was likely accumulation of sorts. Pretty good call at the time. Note that this low came at the end of the third quarter of 2022. And now let's update this. Of course, I made a mess on the chart. And we see here that the count became bigger, and we were able to broaden it out. The green area, we had green shoots in this area. Also, I did include the redistribution count here, and this count did fulfill the objective down into this count objective zone, went right to 3,500 and stopped there. So great count objective range, worked well. We counted it at the time and watched it closely. Part of the reason that we were thinking that we had accumulation forming. Now we have 3 levels or segments of accumulation. And so this count to 4575 is actually is an interim count with higher counts 5075, 5350, and then even higher than that. So this market has the potential to go to new all-time highs above the bear market high of 2021. Well, here is what has happened since. This count has gone to fulfillment at 4607, and this gave us a count to the 4600 level, which is 1 box above our high count in the count range, and then it reversed off of that sharply. And this sharp reversal indicates to us that this count is a really good valid count, and we are likely to face some kind of a reaccumulation structure if this is going to these higher levels. And if it is going to these higher levels, we would expect a new count to form, and this new count would flag up to the higher, one of the two or maybe both of the higher levels that we see above. So we always are looking for confirmation. Now, we can draw a stride with trend lines on our point and figure chart. We draw it off this low and off of the intervening high. Look at this beautiful throw over and overbought condition. Those are examples of momentum and extent. This is part of the language of the market that we are going to discuss in the weeks ahead. Now, moving on. This is a shorter term swing trading count of the S&P 500, 1 box method. This is great for trading purposes. And we have a nice reaccumulation count here. This count I made this morning just for you all. And this count here counts up to 4540. Well, the final high so far in this upward stride swing trading count was 4580. It overthrew it by 2 boxes. Not uncommon to overthrow, especially if it's the conclusion of an advance. Here, note this very large moving column. This column appears to have climactic qualities to it. High volume right here, but not as high as the volume on the breakout of this area. There's a lot of demand here, but I would say that in this bar, there's an element of supply present. And the reason for that is look at the extent of the decline that follows. Goes all the way down to the support zone at 4340 and then rallies into on lower volume. Look at this. low rallies into a lower high. This is a secondary test, and that secondary test gives us a clue that we may be facing a local swing trading distribution structure. Well, now look at the hinge. We have a hinge forming in this point and figure. It's fallen out of that hinge, volumes expanding on the down column here, and we take account from where the hinge is broken down from across. Some people would call this a head and shoulders top, which is fine. And this count takes us 4120 to 4,000, which is into the zone of this reaccumulation area. And so we will be watching for that. We should see continued ease of movement in the decline to these objective areas, and volume should continue to have some high levels and possibly expansion. So there is the S&P. Now let's turn our attention to the NASDAQ 100. Very important, because this really is dominated, as is all the big cap-weighted indexes, by the Magnificent Seven. And the NDX, the NASDAQ 100, is a very important chart. Let me show you why. This is updated through today. And the demand line, the stride of it is determined by this low and this low. They're adjacent. They're very near the beginning of the move. Stride is usually determined very, very early in the uptrend. The intervening high is our overbought line. It's a parallel line. Look what happens. We rally up into this yellow shaded area, which is the resistance zone of the prior bull market peak. We know there's a lot of supply up here at the prior peak in 2021 because of the experience that many investors had on the way down. They had tremendous losses in many of their stock holdings. So they have memory of these stocks and their old high prices. This sets up a form of resistance above the market. Now, we see that this very dynamic advance in the NASDAQ 100 stocks is largely dominated by the Magnificent Seven, and it gets into the resistance zone. It can't quite get up to the top of the channel. That's an interesting development. And let's look at two important oscillators below. This gives us elements of extent and breadth. And the NASDAQ 100 stocks above their 50-day moving average in July reached an overbought state near 90%, and then it basically flattened out, but it flattened out in conjunction with a topping process. This is a climactic surge. This is a secondary test. The secondary test sets up the condition for a more important reaction in August into the demand line, and then a rally of poor quality, lesser volume, and only a few really good days up into a lower high, larger secondary test. This looks like now a sign of weakness, which is that decline into the, let's see if my penmanship's any good, and because it declines into this low, which is below these lows, and then rallies up. So that is a warning, a sign of weakness, sets up in our thinking that this could very well be distributional in nature. So we see, again, the concept of a head and shoulders top here in the structure with a sign of weakness, a rally of poor quality showing poor demand on the way up. Look at the black bars on the way down. We can see that those up bar days are diminishing on the rise and are quite low through this period. That's a big clue. And if we do a 10-day moving or the 21-day moving average of the volume, we can see that that volume is definitely in a declining trend. more on volume in the weeks ahead, because there's a way to read volume very effectively. Now, let me take you to the bottom pane. So what's important here, again, just to review, 50-day moving average of the important NASDAQ 100 stocks, overbought, flattens out, downward trajectory. That in and of itself is a condition for us to be very concerned about reducing risk exposure and protecting portfolio and reducing our internal portfolio volatility, setting stops, tightening up stops, etc. Now, let me show you that this rally into this point here, right here, look at the nature of the breadth expansion into that level. It's very poor, gets nowhere near the overbought condition of near 90% that was at the high of this rally phase. This looks like a giant divergent behavior in the breadth of this index. Now below, the NASDAQ composite, which is all the stocks in the NASDAQ, is a very interesting story, because here the composite itself starts to flatten out the breadth characteristics long before the final high in the NASDAQ 100. And so at this point here in June, we get very close to our final overbought condition at just above 60% of stocks above their 50-day. Then it flattens out, makes a slightly higher high at this peak, the final peak, but we would call this divergent characteristics, and then starts to turn down. This would be a very worrisome, because look, we don't even have the breadth strength that we had back in January, February, or we had back in August of 22. And so with this very dynamic advance, this tells us that it was dominated very much by the NASDAQ 100 and big growth stocks and the Magnificent Seven. And they are now, they themselves are also showing signs of weakening. Now, the rally into the secondary test up here, you can see this point right here is a very, very weak advance. It takes longer to stop the decline in the composite breadth indicator, and it tends to just continue to sag. So the composite of stocks continues to weaken, and more stocks are falling below their 50-day moving average than even in the NASDAQ 100. So this is a very, very weak underlying condition. The market is telling us something. Let me clean this up. And one last point I would like to make, and that is this stride, upward stride of the market, which is touched at this green arrow, produces a poor rally. Well, look what happened yesterday and today. This is the 21st, is you have tremendous volatility on the break of that demand trend line. And that volatility tells us that this market is definitely heavily weighted by this downward internal characteristic of the market, and that stocks are weak, and they have been weak. These indicators were telling us where the market wanted to go. The language of the market was very clear about the internal weakness that was showing up. And so now we've broken out of the upward stride of the market. Therefore, I say that this stride is breached. We are best case in a trading range where we have some kind of a support level around this zone right here, and possibly a larger distribution is at work. So therefore, let us look at the point and figure. Now, this is the point and figure that I've showed you in the past, and this shows you that there's two segments counted in this accumulation area. The first one we hit back in June, and it went up to 387.98, And I like to joke about it because the minimum objective was 388. So on the triple Qs, now I like to use the triple Qs, they count really cleanly. And so we use that as a proxy for the big cap growth stocks of the NASDAQ 100. And you can see here that this count objective was not quite reached at the minimum objective of 388 with an upper objective of 420. I think that's interesting in that it suggests that this market may be a little weaker than we think, because a normal market would tend to be able to get into the middle of the objective range or maybe even to the high and throw over. Didn't happen here. There's a larger count available in this structure in the accumulation, and it goes 532 to 564. So we will watch to see. Now, this count is not up to date into June 20, July, no, wait a minute, where are we? September 21st. This is June 21st. But we would expect the potential to have some kind of a range-bound condition that could build a cause for higher prices, and we would look for that reaccumulation. And I'm not suggesting it happens. We're just going to be on the toes. We're going to listen to the language of the market about what it tells us it wants to do in the future. Now, there is a swing trading count that's available for the triple Qs here. This is one box method, 2-point scaling, and daily data, and we're taking the count of this head and shoulders type structure that we talked about earlier, and this structure counts across, gives us an objective 328, 318 on a swing trading basis here and here. So now we see that this chart actually was through September 20th. Yesterday, we want to see whether or not the support zone across this area can hold, and that's around 356. And if it goes to this area and just stalls, forms ice, as we like to call it. Let me actually draw that in. So if it goes to this, down to this support zone, maybe even through it, and then it just does this, goes sideways, has no lift, no demand, and we see supply present in the volume. This volume is quite high off the peak. We look for that. That shows supply is present as the market, as the triple Qs are starting to descend. And so then if we get this, then we would be on the alert for continuation down into this next objective. Okay, two other quick things, and then we are done for today. And that is, this is the New York Stock Exchange. This is a composite of oscillators I like to look at. And you can see here the final peak in late July in the New York Composite and the New York Stock Exchange Advanced Decline Oscillator 10-day moving average. Note the topping action here as we become overbought, and this is somewhat of a divergence. Look at how we're back up to the prior highs right here, and this 10-day moving average of ADs is descending. So we are on the alert. We know that stocks are starting to fall when this indicator is dropping. This is a breadth indicator. And here we see the sideways action in the New York Composite, but downward stride again in the advanced decline oscillator, which says that stocks are ticking down and going into lower lows, at least locally. And we see here, this is volume, and the down volume is in red, and it is rising, which shows that volume is expanding in the downward stride. So supply is present. And finally, this is the advancers minus decliners 10-day moving average, and we look for overbought and we look for directionality or oversold and directionality for uptrends. And more on this later. We've talked about these divergences in the past, but I encourage you to study them. Okay, next one is the NASDAQ comp, and the NASDAQ comp, same construction, but the story is slightly different. You can see that this is a slightly lower high in late July in the composite, which we already established was weaker than the NASDAQ 100. And look at the decline that is occurring on that test, telling us that internally there are a lot of stocks that are already descending. So we are very cautious because we now have overbought conditions, downward stride, and the index is starting to flatten out after being in a big uptrend. And finally, you can see the same characteristics in the net up to down volume. And so down it goes, and this downward stride from an overbought condition is a warning to us. We saw this rally that occurred into poor quality rally into a lower high, secondary test, overbought condition, and then it starts to descend again, confirming this weakness here. And we see that also occurring in the volume. So volume is actively coming into the market on the downside off of the secondary test peak. So, and let me just very quickly show you some interesting point and figure charts. I'll let you study them on your own. This is the home construction index. 3 counts: accumulation count, reaccumulation count, reaccumulation count. Each clusters into this high objective area, and look at how we get right into this zone and down it goes. Now I brought this chart up to date to today, the 21st of September, and big decline out of this redistribution area, and down it goes, and it is out of the upward stride of this magnificent advance that started in 2022. Very impressive group, and it's been very interesting to watch on its upward trajectory. Here is the XHB, which is the home builders ETF and swing trading structure. And this is this count. I just want to point out that it's not up to date, but it counts 87 to 92, missed it by 2 boxes. And now you can see that the downward stride is developing in the XHB. Here is, now let's get into the Magnificent Seven. I'm going to go really fast. I apologize for that. Meta platforms. This blue count is the one we're focused on. It's fulfilled. 272 to 348, central point 312, and it is stalled in here. This is as of September 6th. We don't have to bring these counts up to date or the charts up to date because this count here is set in stone in time earlier as it was building that accumulation. I encourage you to go look and update this chart, 3-box reversal 4-point scale, and update it to the present. Here is Microsoft, very interesting. Now this chart is brought to date 9/21. Here is an accumulation structure on a swing trading basis, 1-box method, 4-point scale, beautiful upward stride, overbought in 2 places in the stride, and then failure, and look at it fail right down and out of the channel. So then it attempts to rally back up into the channel, stalls there, and is now turned back down again. It's at 316. You see this count worked beautifully. And so this count gave us a count objective to 336 to 370. And so went right up in here, climactic behavior, reversal, beautiful swing trading structure that worked quite well. Here is Tesla. Tesla had a really nice accumulation structure, and here it starts its upward stride. This is in the mid part of 2023, rallies up to 274 to 300, and it goes right to 296, and then has a big counter trend move with let's see what the volume looks like. The volume is not huge, but doesn't need to be, because look, the volume comes in later right here, and then it attempts to rally back up into resistance, and now it's turning back down. This is not up to date. It's through September 6th. So bring it up to date, check it out. And then Google, this is, I believe, one of the better looking Magnificent Seven stocks, because it has not yet reached its swing objective, which is a partial objective through 150 to 166. We'll watch this. But if the market does turn down here, expect Google to spend time building cause. And if it's going to then have another upward stride, it should act better even than the other Magnificent Sevens. Apple fulfilled this count objective here, and then had a very sharp reaction. This is a swing count structure, and you can see that it stops up here into this overbought condition, and then this very sharp reaction tells us that supply is present, volume expands. So we'll keep an eye on this and see if Apple can then build a bigger cause for, it has built a bigger cause, but whether it can in fact fulfill it. Amazon is built a nice structure here, goes 160 to 180. It has not fulfilled it yet. Amazon could very well, it's into resistance at this zone, could very well build a reaccumulation count here if it intends to get up to these objectives. And so we will watch closely to see if it can act as best of breed for the Magnificent Seven, and then be able to lead the way up and out. So that's the best we can do. Has not fulfilled that count yet. And then Netflix, very interesting. This light blue count has been fulfilled with a climactic upthrusting action, and then a very sharp reaction which shows supply present, volume expanded, and now it's in a sideways area here, and a higher count is available, 540 to 615. And so this also could be a stock that has potential for higher prices, because remember, our point figure counts pointed to higher levels. So we would expect that this very volatile period that we're in the market could be the beginning of a reaccumulation structure, and we will patiently watch that and pay attention to the language of the market to tell us whether these stocks would like to go up again. And so finally, NVIDIA, very important bull run in NVIDIA. I wrote a blog on this last week. Please go read it. This chart is in there. This is a percentage scaling method chart with a whopping 3% scale up the side here. This is a really aggressive scaling, but note how when you do 3% scaling, it gives you a count objective 350.25 to 457, and this through over the top went up to just over 500, 502, I think, and now it's turned back down, and I think it's in the 415 area today. I don't have this chart up to date, but it's this chart does show the diminishing thrusts on the way up. Update this chart, check it out, but it's back below the objective range here, 350 to 457. That is often a sign that the count was valid and good, throwing over the top of a count objective range at the conclusion of its advance is not unusual. NVIDIA is one we'll watch closely. And finally, this is one that's just curious, interesting. I've been following it for a long time. Walt Disney Company, and 2 redistribution counts. This is the redistribution after the distributional top in 21. And then you'll note that it made a redistribution, was already breaking down before the bull market peak at the end of 21. Interesting, Disney was already weaker. So we just counted the redistribution, count 64 to 72. We had a redistribution count, counts 82 to 66. It just went down below 80 briefly. It's 82, 86 as of today. And one to watch, very interesting. I don't see this as accumulation at all, downward stride of the market, but it's just such a wonderful case study, really a bear case study. And so one that I think is worth study, just so that we can develop our skills at counting these downward structures. And with that, I'm going to say so long. Thank you so much for being here. Thanks for letting me go over, and we are going to get into the language of the market and talk more and more about that and how to integrate these different concepts and to become better Wyckoffians. And with that, have a great week, and we will see you next time.